Hey everybody, Jeremy here, coming at you for the weekly market bias update report for Sunday, September 3rd. Starting off, before we dive into charts, reminder, tomorrow is Labor Day. The market is closed, so we're going to have a short trading week this week. And on that note, let's just go ahead and dive into economic data coming out this week. Actually, a very light week this week. We have unemployment claims on Thursday and ISM services PMI data on Wednesday. So those will be important to keep an eye on, but I'm not expecting them to move the market a whole lot, honestly. This week is just super light, so it's going to be primarily focused on technical analysis and not looking at as much news and other impacts that might move the market. So that's really nice. Going out to our federal fund rate, this is the FedWatch tracker tool by CME Group. If you just go to cmegroup.com, you can find this on their website. And this tracks basically the market's estimating whether or not rates are going to stay the same, go up, or go down. So you can see right now for the upcoming meeting in September, this month, a couple weeks from now, we are expecting rates to be paused to stay the same as they are now. Right now, we're at 525 to 550, and the market's only pricing in a 7% chance that we get a 25% basis rate hike. So far majority of the market thinks that the rates are going to stay the same, that the Fed is going to stop raising for now and go into a prolonged rate pause and just kind of let the market digest the increases that we've had so far. The only thing that I can see potentially changing this is if we go out to crude light, and we're going to start there today. If we go out to crude light, we had a massive push higher. I was really crossing my fingers that we would get kind of a couple of days of just dojis right here, following a breakout right there, and then we'd rock and roll, and we just never really got a pause. We got 1 day's candle that did actually trigger a breakout signal, but it was already 4 days into an upswing. And then just Thursday, Friday just pounded the table, moving higher in a drastic fashion. We did break out on the weekly chart here. So really there's not much resistance until we get up to like $93 on crude light. If that happens quickly, the higher oil prices could impact our inflation conversation fairly drastically. So I'm going to be watching this chart to see if there is any adjustment needed in terms of my exposure based on the inflation conversation. That said, I would absolutely love a little flag pullback here, back down into about the 83.50 zone, somewhere right in here. If we get a little flag on the weekly chart, or I can show you a little bit better on the daily chart, if we flag down and come kind of down into that range between the high candle here, anywhere right in there, a 2-3 day pullback into that with a doji, and then a confirmation candle higher, crude light is definitely going to be on my radar. And then also XLE, the energy sector ETF, did gap higher and broke out, confirmed, closed up near the high. And it looks like it has some room to run. It looks like it really wants to come back up and test the 3-year high back up here at 94.71. So that is kind of my base case as of now for the energy sector. I am assuming that we are coming back up to touch these highs, and then we will see what happens over the coming weeks from there. But that's kind of the gap that I'm looking to play. It's not too far into the breakout to play this. If someone wanted to bar by bar it, you could enter above the high of Friday at 90.84 cents and then stop just below the low of the candle and play this as a bar by bar if you wanted to momentum trade it. Otherwise, there are still stocks like MRO in the energy sector that haven't moved as much and still have really favorable risk to reward here. A little bit of resistance up around 28.5, but after that it opens up to 30.75 and then ultimate all-time highs out here at 33.42. So nice little trade setup potentially on MRO there. And last week we mentioned ConocoPhillips, so let's look at that real quick. Had a nice follow through on ConocoPhillips here. And really, honestly, I'm looking at this as a longer term play. My entry point here is actually this purple line for a trade that I currently have on it. Looking for a little bit of hesitation up here around 125.19, the previous pivot high back here on the weekly chart. If we can close and get above that, really, again, looking at all-time highs, looking all the way up to 136 and change. So nice trade here, and there's still potential to bar by bar this as well. Although honestly, at this point, for me, just because it has run, what is that? About just shy of 3%. I would love either a day or two of just kind of small candles here, setting up a new little breakout zone, and then somewhere that you can put a stop nice and tight underneath. So that would be the ideal scenario here. If it does just decide to rip and roar higher, like I said, you could bar by bar it, but that would be the best scenario, would be have a little bit of a consolidation there, or maybe even just a slight pullback, snapback retracement that would come down and test the highs of that breakout channel before rocking and rolling higher. So those are kind of what I'm looking for Conco Phillips, but still potential trade there for anyone that wants to dive in. So with that, last thing I wanted to point to before we dive into the rest of the futures market here is our week performance from this last week. So really good tool here. I've shown it before. I'll show it again. Finviz.com heat map. And I have this set to the 1 week performance here in the dropdown. And it makes it super easy, guys, to look at the market as a whole and see where the strength and weakness is. Healthcare, obviously a lot of red. It is weak. Utilities, huge red block right here. It is obviously weak. What is strong? Basically all of tech. Every different part of tech is solid green, huge gains in it. Also energy, big gains, almost 4%, 5% in many of these stocks over the last week. And then financials being a little sneaky here. It didn't have huge gains, but locking in 1.5%, 2.5% in financials is a fairly solid move for the financial sector. So for me personally, the places in the market that I am going to be looking at the most for continued bullish trades is energy, technology, and financials. So those are the places in the market I'm going to be personally focusing on this week. Just wanted to point that out as a tool again, in case anyone has forgotten about it or hasn't been using it. This heat map is very helpful for that. And then this is the 1 day performance. You can see a little bit of weakness coming in to some of the tech sectors on Friday. This is honestly probably just profit taking at the top. People kind of repositioning their portfolios, especially in NVIDIA, where it just had such a monster gain over the last really quarter, ever since the previous quarterly results here for earnings got announced. I mean, shoot, guys, that is up. What are we at? We're at 66% in 3 months. So obviously it makes a little bit of sense that we had some profit taking, but honestly not much. We're still above the 9 EMA on the daily chart, still looking at potentially a breakout here above the all-time high. And that would be locked and loaded moving higher. So honestly, I would love to see this pull back to a longer diagonal. If we toss this out on weekly chart here, you can see from the previous breakout here on the last earnings and then through the pivot low here, I would love to see this hang out, pull back to that, and then set up a breakout up above, reset that risk graph a little bit, and just give a little bit more time in the consolidation zone. So that's hopefully what we'll see there. Honestly, NVIDIA has been rocking and rolling so hard that I kind of doubt that we are going to get that pullback. But anyways, that is what I am looking for and what I'm crossing my fingers for. So with that, let's dive into the major indexes and do our quick market cap for the week ahead. Again, Monday is going to be no trading. Today, futures just open and we have a little bit of profit taking, and this is exactly what I want to see. You'll see this kind of gray box here that I have drawn, and let's go in to an intraday chart. So this is a 4-hour chart, and actually I want to drop that to a 1 hour. So on the 1 hour chart, you can see here, this is our consolidation zone. This is our spot where within this box, we're not going to be surprised at any price action that occurs. I would love, honestly, to see this continue on down and touch that 4,500 level. This 4,500 price level is very important to the market right now. I would love to see it come down, form up support there for a little bit, and then start rocking higher. Really hope that we get that. We will see if we do or not. We can always ask for what we want, but we don't always get it as traders. My base case here is that we are probably moving higher and confirming back up towards the all-time highs around 4,600 to 4,635. But honestly, we had such a big ramp up over the last 4 or 5 trading days that I would love a little bit of chop action and a little bit of consolidation here following that break above the diagonal resistance that is coming up to the high of the day on Friday. So if we can break above that diagonal after maybe Monday and Tuesday consolidation going into the economic data that we have, the PMI services data on Wednesday, that would set up a really nice trade. We aren't going to be concerned at all at price pulling back in here anywhere in the range, but we want it to close above this 50-period moving average, which is just shy of 5,000, or excuse me, 4,500. If we end up having a candle that closes below that line, a deeper pullback into the 20 would then be in play. And if we break that 20, at that point, the weekly chart is going to be signaling something different. If we break back below the 20 period moving average on the weekly chart and get back down here to the lows, all of a sudden, instead of this looking like a really nice bullish retracement with confirmation, then it starts actually looking like kind of a little head and shoulders pattern. I will draw right here. So there's the head. Here's the right shoulder. So shoulder, head, shoulder. And then if we break down below what's called the neckline there, that would be lookout below. So it's really important for us to hold these levels on the daily chart so that the nice bullish retracement stays a bullish retracement and doesn't turn into a topping pattern on the weekly time frame. So just a little quick lesson there for you on topping patterns and what we want to see in terms of development moving forward. With that, let's go out to the NASDAQ. Jump out to the NASDAQ here. And this is daily chart, very similar. Consolidation, I don't have the little box drawn yet, but let's just go ahead and put that in there, drop into a intraday time frame. Looking basically to stay above, hopefully this pivot with closes, but I'm going to go down to the lows here of this bracket and basically bracket out anything within that range. So anything within that range, again, lines up perfectly with the 50-period moving average here, and also the rising 9. So anything that stays inside of that range there is going to be what we want to see in terms of consolidation and pullback. And then hopefully the base case is going to be a break above the high of this candle here. And we're just going to add a alert. So we got our alert here at the high, and anything above that coming back up, potentially testing the highs up there. Toss this out to a weekly chart just to see what's going on. Weekly chart does have bullish confirmation on a rising 20-period moving average on the weekly chart. And a couple of my indicators here, you might be seeing these little blue dots. These are part of a trailing ATR study that I've been playing around with a new trading system based on that and Bollinger Bands. So this is actually last week on Friday, close of Friday, I actually got a bullish signal for that based on the new system that I'm back testing and testing out. So my base case is moving higher, at least to test the highs up here at 1,662. If not, moving higher back up to all-time highs around 16,700. So new bullish trend here starting. Very brief lesson on this. I'm not going to get into this indicator right now, but short version is when you have purple dots and red candles, you are in bearish trend. When you switch to green candles and blue dots, you are in bullish trend. And if we go out and look at this just real quick, you can see nailed the top here, came down, switched to bullish. This was bullish here, got signal, that came down, and so on. So you can see really, really clear patterns here. This is with Heikin-Ashi candlestick charts instead of regular candlestick charts. So just to switch, this is what the regular candlestick charts look like versus the Heikin-Ashi candlestick chart, which basically just adjusts the formula of how the candlesticks are calculated to smooth out the price data. And you can see instead of being red and green, red and green, red and green, it switches and is consistently red, consistently green for those pivots. And you only occasionally have a little bit of noise in there where the market has extra indecision. So Heikin-Ashi charts are something that are very, very useful for looking at overall longer term trends. So anyways, that covers the NASDAQ, looking for some more consolidation on the daily chart. And then eventually a break above these highs, pulling back probably into this 50-period moving average around 15,300, 15,360. Going out to the Russell. Russell had a big consolidation pattern, rocked itself higher. It is still underneath its 50-period moving average as opposed to the S&P and the NASDAQ, which are above it. So we need to see how price digests here. We also have some significant resistance over here. So if we draw our little box right there, we want to see price clear this level and probably clear the high here of 1934 before diving in. Before doing that, however, we really need to see some sideways consolidation or potentially a retrace here to reconfirm the 9, just because it's got a little cleaning up to do. Coming back down, retesting the 9, showing that as support, and then breaking higher would give us a much higher probability of actually running up and getting back up into the highs at the top of this end of our consolidation zone. If we put this out on the weekly chart, the reason I call that a consolidation zone, you can see it's been tested 3 different times. So right now, base case is price coming back up and retesting that for a 4th time. And every time you test a zone like that, you get a little bit more strength to potentially break through it, especially if you have a higher pivot like we do right here. So you'll notice most of the other times we went from the low straight up to the high. From the low, tried to get up and couldn't, and then went from the low straight up to the high. We never had a pullback within that reset and gave us a new starting point. Now we do. So this is actually a change of character here. We went from the bottom, came all the way up, exhausted ourselves, pulled back halfway. But now that we pulled back halfway, we have all of this extra space to work with on a potential breakout that would probably line up a breakout trade to be coming out and targeting somewhere up here in the 2135 range. And coincidentally, look at this, that is about the same distance from the breakout channel that we would be coming up off the lows, starting our new pivot high. So interesting little targeting there. I like the look of Russell potentially to break out on this. I would love, like I said, a little bit of consolidation here, break above the high, and then go. And anything breaking above that high after a day or two of consolidation, I think is actionable and would be moving up at least towards this 2017 level, if not coming back up towards 2150. Finally, going out to Dow Jones real quick. Dow Jones has had a little bit of a flag pattern here. We need to break back up above 35 and let's say 35,100 on the daily chart. Looking at it on the weekly chart, this is kind of the stair step up, down, up, down, up, down. Coming back down, we are now testing this line as support, and looks like we are breaking free of that and should be coming back up to test 35,800. Before we close out, just want to throw out and look at the dollar. The dollar is on a momentous tear right now and does not look like it is slowing down on the weekly chart at all. In fact, there's really nothing ahead of it to slow it down until we get up into like 29.6 and then ultimately back up to all-time highs. This is not a good look. We had a few days of reprieve. Monday, Tuesday of last week, we had a nice big bearish candle. We broke the 9 and closed below for the first time, second time, and then the market just said no way and skyrocketed higher again. And that is going to be highly based on the euro US dollar cross pair. So the US dollar moves heavily on currency trades. Obviously, that's the biggest component of the strength of the US dollar right now is compared to other currencies. And we had this nice retracement bounce off the 200 period moving average on the daily chart of the euro US dollar cross pair. That looked like that bearish trend was over, looked like it was going to start moving higher again, and a higher euro against the dollar weakens the dollar a little bit. And so that would have been beneficial for our US markets. Instead, it just came right back down Thursday, Friday, closed at the lows, is threatening to break down here. So it is very likely now that we are going to see the US dollar euro cross pair come back down here to like 1.066, 1.067, somewhere right in there. And any continued move to the downside here is going to be weak for gold and also weak for equities market in the stock market. So that is going to be kind of the base case as why I'm saying that we really need to see a little more consolidation here in the zone before we end up having that next leg higher. So that's kind of one of the reasons I'm looking for that consolidation, outside of the fact that I just really want some consolidation here before moving higher to reset the risk to reward parameters. But the US dollar euro cross pair is the other reason for that philosophy that we are going to get a little bit of time off here before we ultimately break higher again. So anyways, I hope that helps, guys. Last thing just to go through, our AR high low indicator daily chart has switched to bullish again. We've had 2 bullish candles above the 50, which is one of our signals for the bulls being back in charge. We do want to see an expanded candle here. You'll see, back here, we have a couple that close above and then it faked out and went back below. Had a couple here that closed above, and it's not really until you get a big candle that closes higher, showing a lot of companies, not just a few, are moving towards their 1 month highs and hitting their 1 month highs. Whenever we're in the like -50 to 50 zone right there, it basically just shows there's a few that are doing it, but not many. So we really want to see at least one more candle, maybe getting up to like the 200 or above level there. Finally, going out to advanced decliners. Advanced decliners are 20 period SMA is still in the bearish territory, although it has bottomed and is moving higher again. So that is nice. We want to see it cross above the 0 line for our ultimate bullish confirmation. But I do like that this candle set a low up here around 660. So basically that means there are 660 companies more making higher highs than higher lows in the marketplace currently on Friday. So it's nice to see the low of that candle up here at a higher range, and hopefully we see that continue in terms of the trend moving forward here. So hope that helps, guys. Enjoy your trading week. Enjoy your day off for Labor Day tomorrow, and I will see you trading the markets on Tuesday. As always, let me know if you have any questions.